Hello, my name is Dougal Maple-Brown. There has been a lot written about CBA and the lofty valuation it has attracted. At the peak, it traded over 30 times forward earnings and over 4 times book value. This is for a stock with limited earnings growth and a low teens ROE. A few months ago, CBA was over 12% of our equity market. Now, a lot has been written by media and brokers about how unprecedented this was. Now, the valuation may well be unprecedented, but it certainly wasn't the first time a stock had got very big in our market. So I went back over my 25 years at Maple-Brown Abbott and looked at whether it really was unprecedented. So this is my chart, market cap of the giants. The chart here highlights 5 stocks that have got very big over the last 25 years. The blue columns are the peak, as a percentage of the entire Australian equity market. And the brown columns are where they are today. Now, the comparisons aren't perfect, but I'll go through them one by one. The first one is Telstra. Back in 1999, as the tech party was in full swing, Telstra got to around 10% of our market. And today, it is but 2%. I would argue that Telstra is a pretty clean example. The next one is more complicated, but arguably the most striking. At the height of the tech boom in 2000, News Corp got to over 15% of our market. Now, today News is largely listed in the US and has also spun off Fox. So the brown column is the US market cap of News Corp plus Fox converted back to Australian dollars. Now, if it was listed in Australia today, that company would also represent about 2% of our equity market. The third example is BHP and the GFC, which also got to about 15% of our market. Today, BHP is around half that. Now, I won't go through all the changes for BHP over the last 15 odd years, but the 2 big ones broadly offset each other, being bringing the London listing back home to Australia, but also BHP has spun off the petroleum business to Woodside Petroleum. The point remains, BHP today is broadly half what it was at the peak. The second last example is CSL during COVID in 2020. That stock also got to more than 10% of our index, and today, roughly 5 years later, it is less than 4% of our index. The final example is CBA. It peaked at over 12% in June, just 3 months ago, and today is around 10%. So what's my point? Well, first of all, getting over 10% of our equity market isn't actually unprecedented. We have seen this numerous times before. My second point is that index funds are backward looking. If you invested in an index fund 3 months ago in June, then 12 cents in the dollar would have gone into CBA. We, as active managers, are forward-looking. Finally, valuations matter. And as a value manager, that is what we focus on. We don't spend a lot of time trying to work out why a stock has got so expensive, nor what catalyst might cause it to fall. We focus on valuations, and the stock prices eventually take care of themselves, as they have through history.